and they want to now control the pricing. They want the pricing to happen in Shanghai, not in London and not in New York. So that, I think, is a very, very big change. And I think this is one reason why we're beginning to see the gold price and also the silver price really begin to move up. Well, I don't think it's going to go down the giving up capital control route. I mean, I don't see that really. I think initially what it's going to do is it's just going to look at trade, if you like. And so the way it will work, and at the moment, there's no fixed rate at all between the yuan and gold. That might come later, if you like. But for the moment, I think that the way it is going to work is you'll have an SGE-controlled vault, say in Saudi Arabia, the Shanghai Gold Exchange, which is a wholly owned subsidiary and company controlled by the People's Bank of China, which is the central bank, if you like. So this is very much a government entity. The stock exchange is a government entity. It's not a private corporation like we would be more familiar with in Europe. And gold can flow in and out against payments in yuan. No other currency will be involved. Okay, so, if, let us say, you want to do a deal with Saudi Arabia, let's say for buying oil, I mean, not necessarily China, another one, then as far as the Saudis are concerned, they may be quite happy for you to pay in gold. In which case it'll go into the vault and they will end up with Chinese yuan, if you like, if they want to exchange it for that or whatever. So this is not something which is just going to be the preserve of China on its own. I think that other nations will be able to deal, but the stipulation is that the exchange into and out of the vaults for gold will be Chinese yuan, no other currency. That is my understanding of it, but obviously things will clarify as time goes on. I would say, I mean, if I try and put myself in the shoes of the Chinese government, I mean, you're looking at the global settlement currency, the dollar, is in its final death throes. We don't know how long it will take. It might take a year, a month, it might take 10 years, but we can see that the way things are going after President Trump was elected, then the demise of the dollar is accelerating. We're seeing the end of the fiat currency era. At some stage, China has to protect herself from a collapsing dollar. If she does not put the yuan on some sort of gold standard, then it will go down with the dollar, because the dollar is the king of fiat currencies. The dollar goes, all other fiat currencies go. It's actually as simple as that. Why? Because currency values depend not just on the quantity, the expansion of the quantity or contraction of the quantity, money supply numbers and all the rest of it, as the monetarists will try and tell you. It also depends entirely on the faith that your creditors in that currency have in the currency. So when the dollar goes, you can see that other currencies are also going to go down the same path because they're all linked to the dollar. I mean, maybe not completely linked, but they are effectively linked to the dollar. The dollar replaced gold, if you like, as the reference point for international value. So dollar goes, all other fiat currencies go. So it could be, as far as China is concerned, that they need to have, as that backstop, a situation where their plans, if you like, for survival post-dollar, they need to be able to fix the yuan to gold. And I think what they have done by very, very rapidly deciding to open SGE vaults abroad and to allow foreigners to start participating in, directly in futures. And it's not just gold; it's also all the metals on the futures exchange. Basically, they've taken a very, very big step towards protecting themselves in the event that the dollar actually turns turtle and goes down to zero. No, I don't see it. I mean, the Hong Kong dollar works and has worked very, very effectively on a currency board system, linking the Hong Kong dollar to the US dollar. It's worked brilliantly. It's fine. But once the US dollar goes, the Hong Kong dollar has got to find another currency board link, if you like. And I think that will probably be gold. I can't see any alternative. I think it has to be a new strategy. I think it's certainly a very good point that there's going to be a huge, huge change in the way China operates. And I think at the moment what we're looking at is, okay, let's assume that the dollar is actually, in great danger of going to zero. We have to protect ourselves against that, which basically means we've got to control the gold. That's in very, very simplistic terms. That's as far as the thinking currently goes. I think that if the Chinese do have much sense, and I think they do, I mean, there's some very, very good minds in China, particularly with respect to understanding money, credit, and all the rest of it, because after all, they still understand that gold is money and the rest is hot air, potentially. I think also they do understand that the Industrial Revolution, which they're trying to manage, if you like, or benefit from in particular, is really a modern version of what Britain went through, in the last 2 centuries before the 20th century. And particularly when we had a gold standard effectively running from 1822 all the way through to 1914, when war changed that. I mean, the stability of currency value, which gold gave, was the basis of the success of the Industrial Revolution in this country. By the First World War, 80% of the world's shipping was built in this country. By this country, I'm talking about the UK. I mean, for a nation at that time, I think the population was in the region of about sort of 20, 25 million, something like that. We controlled the world virtually. But the First World War changed that. And indeed, I mean, London was the financial center of the world. That was the power of sound money. I mean, it really was. And I think that the Chinese are cute enough to understand that at some stage, when the game changes, they're going to have to move away from supporting businesses by printing money if necessary, by expanding debt and all this. I mean, they've actually learned the debt thing to an extent. I mean, particularly, with the regional governments having got into enormous difficulties in the past. They've learned all these lessons, but basically they're playing the dollar game. And I think when the dollar goes, they'll play a different game. And I think they will play the gold game. No, but I mean, you're right to make the point about the 1980s, because that's when the regulations were produced by the Communist Party, the Chinese Communist Party Politburo, appointing the People's Bank of China to, if you like, manage the nation's gold and silver reserves, its acquisition, and all the rest of it. And we have to remember that back in 1983, the sort of common view, and this would have been a very strong view in China as well, was that you needed to have at least 10%, maybe 15 or even 20% of your assets. So if we think of it in terms of reserves or whatever, in gold. In 1983, you had about 19 years up to 2002 of bear market in gold. Now, this was actually a very good opportunity for the People's Bank of China, which also handled exclusively the nation's foreign reserves transactions, to swap some of the foreign reserves that it was accumulating into gold. And I calculated at contemporary prices that it was quite possible that by 2002, when the Shanghai Gold Exchange was opened, and then for the first time, members of the public were allowed to acquire gold. I reckon that in all that time, they probably accumulated something like 20,000 tons of gold. Now, they will have accumulated a lot more since then, partly because they've encouraged mining to the extent that for many years now, China has been the largest gold miner in the world, and still is, though output is now declining. Also, they've imported doré from other nations, I mean, particularly, nations like Mongolia and so on and so forth, and none of the produced gold leaves China at all. I've described it as Hotel California for gold. And also you've had this flood, if you like, which you referred to earlier in the interview, of gold that's been migrating from the West into the East. And it's been doing it for years and years and years and years. Now, behind all this, I think there's a sort of a Marxist economic view that capitalism ends up destroying itself. And nowhere is this more evident than the value of credit in a capitalist economy being destroyed. And so, rightly or wrongly, that's what they now see. It's what motivated them, I think, to accumulate gold in the first place. And it's now, as far as China is concerned, a huge, great problem, which they need to ensure doesn't undermine them. And interestingly, when they could see that President Trump was elected, first of all, that was bad news, I think, in if you like, a global economic sense, because of his tariff policies and so on and so forth. And then when you had the Liberation Day, the first thing that happened was an announcement from, I think it was the trade office or something in China, that they were stepping up negotiations with Japan and Korea to have a free trade area with the three of them. And then the following week, President Xi went and visited various of the ASEAN nations. We're talking about the nations, if you like, in a trading bloc, a free trade area concentrated in East Asia. We're looking at Myanmar as one of them. You've got Cambodia, you've got Vietnam, you've got Thailand, you've got Malaysia, you've got Indonesia, and so on. So you've got all, there's 10 of them basically. And what was discussed in those terms, obviously, was trade. How are we going to deal with our common problem that's given us all by President Trump? We've got to work together on this one. I think that was obvious. But what was less obvious at the time was something that was followed up with an announcement from the Shanghai Gold Exchange, or the People's Bank, if you like, because that still controls the Shanghai Gold Exchange, that they were going to open Shanghai Gold Exchange vaults outside China for the first time. And since then, we've heard that they're opening a vault in Hong Kong, and they will be opening one in Saudi Arabia. Why Saudi Arabia? Well, okay, it's not part of ASEAN, but that's where all the oil comes from. And obviously, I think that the Saudis, if you like, would very much like to have, a currency which at least holds its value when they can see, just as the Chinese can see, just as we're discussing, the dynamics supporting dollar credit, basically undermining the currency. Even the Saudis, and they don't sell any oil into America at all. No. So, even the Saudis want to be part of this. And I think you'll probably get other one. I can think Thailand is quite likely. But then that was followed literally just over a week ago by the Shanghai Futures Exchange saying that it was going to open itself up to traders from foreign countries. Now, banks can deal through the Shanghai Futures Exchange as is, but they have to set up a Chinese corporation in order to handle the trades. The change is that foreign banks and all the rest of it can become members of the exchange directly and trade directly on it. Now, there are two reasons for this. One is that they are internationalizing the yuan. So that is obviously going to become the Shanghai Cooperation Organization and the BRICS common settlement currency. That is the plan. So it's going to replace the dollar. That's the first thing. And the second thing is that, and this is, I think, very much tied in with it, gold prices until now have been controlled in London and on COMEX in New York. That is changing. The Chinese basically are the biggest players in the physical market by a long, long way, and they want to now control the pricing. They want the pricing to happen in Shanghai, not in London and not in New York. So that, I think, is a very, very big change. And I think this is one reason why we're beginning to see the gold price and also the silver price really begin to move up.